All right, we're getting a little choppy and floppy here in the Trump trade determination, whether we do a deal with China or not. Now, for the first time all year, friends, we've got a lot of different mixed signals, mainly a weekly outlook. Today's only Tuesday, but by Friday, friends, we would generate, if we closed here or lower, where we're currently at as of 12:30, a sell signal in the spiders for the first time all year, and that comes on the heels of a sell signal on a weekly basis with the Dow Jones Industrial Average. In the meantime, our live algo room, I just wanted to point out a couple little ideas here for you. First and foremost, let me expand this chart. This is the E-mini S&Ps, the June contract. So let me do something I'm not really a big fan of doing because it's symbol connected in the marketplace. So what I wanted to just briefly point out to you that on the futures, we have last week, that's a Jerome Powell sell signal, right? The volume action, our volume indicator, divergent on this rise in the market. But here's the most destructive thing that I see right now in the S&Ps. In today's trade action, just like yesterday, we had a nice recovery off the lows, but the advanced decline did not recover. It was a negative advance. Advancers were slim, decliners outweighed the advancers in the marketplace. Now, the current situation is we're 52 stocks, advancers 447 declined in the S&Ps. I don't care how much this rally or the market recovers. With that type of negativity in the breadth of the market, this does not bode well moving forward. What do I mean by the first time all year we get a sell signal when you just saw some? Well, this is the E-mini S&Ps. This is the June contract. So let's take a look together. What I meant is that all year, everyone's been trying to predict the top of the market. And I'm pretty sure if you follow anyone on YouTube or on the internet, everyone's been saying it can't go any higher, can't go any higher, can't go any higher. And then they get a little sell signal and the next week up. Can't go any higher, can't go any higher. Got to get short, got to get short, got to get short. And then now, finally, I don't know if anyone's got money left, but any bear out there that's been selling all the way up, they're either not going to believe it this time or, in fact, they have no money left to do it. But this is a very strange anomaly that just developed as of today, and I want you to see this. We crossed the threshold, and we are generating not a sell signal, but this is warning us because the week is not over. It's only Tuesday. So keep this in mind. There's a couple things that are really bizarre about this. A, it's going to come on a weakening volume structure, number one. Our volume indicator, as you can see, on a weekly basis, the momentum bars are kind of sideways. The advanced decline that's probably one of the biggest giveaways right there. But lastly, as far as price, here's a low, here's a low, here's a low, and there's a low. Now, I don't know where we're going to close this week. And who knows? Maybe this sell signal dissipates, right? If the market comes back up. But if we close less than those lines in the sand, that's not good. That's a short. That's a sell signal, and it probably would get us back to around 2,800, it'd be my guess. So there's minimum, the first objective on a breakdown here in the S&P is 2,800, got to wait till Friday. Now, let's say you anticipate and you say, forget that person, the move would be all done by Friday. I want to get in on this trade. Well, if you do, may I point out, if the market closes back above the 29.16.5, you don't want to be short anymore. That just means it's one more false sell signal in the game. But this is an absolute fair warning that the market is turning right now. Our current system strategy, we are, as you can see, the trade room. Guys, this is live. You're long. You just took a little profit. We've had some nice little trades today. A couple doohickeys, but yesterday, this week, the day before, I've been uploading these YouTube videos, and you've been in the live trading room. You know this has been just a killer week for us, man. The Algo 17 program, fabulous. We just generated a new high probability setup. We are against, we had strong support in the market, even though, and what I mean by that is double check. Green line, that's support. Support. You don't sell support. You look for buying opportunities at support. If it closes below support, you get short. That's what I'm saying. Now, our system generated a nice little trade on a day trade. So again, the key level here is we have support, monthly pivot support there, which translates to near today's low. We've taken some shorts, it's scaled out, trails out. Took a long, got nicked. Took a long, got nicked. Went short, got nicked. So we've gotten nicked a little bit today, but again, earlier today we had a great setup on the short side this morning. So all in all, it's consistent with doing a good job considering the fact that this has been kind of a goofy little, it's a 15-point range, but you can see it's been a very difficult 15-point range. The current trade right now went long, got out of one, it's still long, and it'll trail the stop, and you can see that's the reflection of that long right now. So moral of the story, if this support does not hold, we close below that support, we got some troubles moving forward. How much trouble? Well, my advanced decline work is a weekly basis. Take a look at the Dow Jones Industrial. We just flipped a market that will close below. If we do close here at the end of Friday, we will close now below the lowest low of the last 4 or 5 weeks. 1, 2, 3, 4, 5 weeks. A close below a 5-week low is not a positive sign. In fact, it really hasn't done that all year. So that's number one. Number two, the NASDAQ 100 will also now form a gravestone doji last week and a long leg doji this week. Lots of indecision there. Then the S&Ps, which I've already illustrated, what is it doing? First and foremost, weirdness prevails in the fact that it's just one of those weird weeks. It started with the Derby and it just continues in the market. If we close and generate a PPS sell signal, we need to close below support. That's the key. So is this a bona fide sell signal right now? Are the dynamics completely changed? Or are we still back into like a trading range and we're at the low end of the range? We'll have more information on you Friday because right now, as it seems, for the first time ever, and you're watching this live, we've not generated a threshold sell signal, a PPS sell signal. The last one we got was over here. That does heighten and should heighten your attention to dynamics are changing in the marketplace. So that's the message number one. All right, let's look at a couple stocks. All right, first thing, we were pretty hot and bothered about a rotation into biotech. We were starting to see that. But let's start from the top. This is the weekly thoughts and observations. This came out this weekend. We sent this out to our clients. This is, if you've never seen our weekly advisory service, we put this out every week. We have a weekly video, and then we follow up in our live trading room. Traders have the choice. They can be in one or both of our live trading rooms. We have the main trading room, which follows this advisory service, and then we have our algo room, which day trades S&Ps, VIX, Spider, crude oil, and the euro currency. So here's our observations. Coming into this week, for the first time ever, the Dow was projecting a bearish week, using person's pivots, and OBV was signaling a weak market rally condition from the prior week. So that's number one, what red flag. We've not seen that combination, and you've not really heard me talk about stuff like this all year long. We're talking about small cap energy, small cap biotech, small cap regional banks. We need this market, at least in the, again, we needed to see Labu biotech break out if we were going to see follow through in, again, the Russell. So we were waiting to see if we could get a breakout, and my target area is that green line way up there, which is synonymous with the September, October highs. All right. Next week, a couple things that I wanted to point out that we were looking for is, again, some of my favorite indicator stocks. Illinois Tool Work is one. ITW, it's done great. More importantly, in the March 25th issue, for those that, in fact, someone sent me an email that said, John, where was the issue that you mentioned your pot stock choices? It was in the March 25th issue we gave out for long-term traders, 18 to 24-month traders. I said you'll want to be in Abercrombie & Fitch, Ralph Lauren, Target, TJ Maxx, Constellation Brands, Kellogg's, and in the pot stocks, Canopy Growth, Kronos, Afria, and Zyne, Z-Y-N-E. And we took that stock from about 552 up to around, as it is trading now, into the 13 region. Also, Disney, what a big mover there. That showed up on our scans. Material Dow DuPont, and again, ITW. So for this week, I said GW Pharmaceuticals looks posed for a breakout from about $175 up to $200 level. And actually, you can see here, we entered in a long position ESPR. We are out our complete trade. We trailed our stop. We exited half. And so our performance year to date, and this is of Friday. I do this every week for transparency. We put out the trades before they happen. You know, I don't know if you noticed this, but we put out just what you would want. I mean, think about it. If you really want good advice, give me information before it happens. Tell me the name of the stock. Give me the symbol. Tell me the entry. Give me the stop loss. What's my profit target, and what's my expected hold date to reach that? And that's what we put out. By the way, you'll see here in a short, Nike entry. We didn't get the market to get a fill at 85.70, but that would have been the stop, and that's the target, and that's the hold date. Nike, by the way, is on the downslope. So anyway, this is what represents. If it's red, that means it got stopped out with a loss. And our cumulative as of today, we're a little better than 156, thanks in part to upside in Dropbox and definitely the trade that we had in Esperion. All right, moving forward. This is where you find all that on our website. We, in fact, started off the week with our video sharing why we were bearish Nike with the sell signal that ensued and the conditions. Many of you might not know this, but seasonally speaking, Nike, one of the interesting aspects here is when Tiger won the Masters, everyone was talking about buying Nike. You got to get long Nike. Not so cool. Nike's secondary rally came on weakening volume structure, and this is like the worst time of the year from a seasonal trend to buy Nike. Relative strength, as it was rallying, making new highs. See this red line? It made a bearish divergence pattern in relative strength. That's not a good sign. So if you're looking to short, those are the conditions that I look for short selling stocks. So the same can be said with the spider. We close less than support, and we close with a weekly sell signal. Gang, we haven't seen that in a long time. Now, let's review real quick. GWPH today, it's only at 186, but wait, it was trading near 200. GWPH was the stock that we were talking about for this weekend for traders coming into yesterday to trade. It started off at 172. It broke out above 175, so look for a breakout above 175 to go to 200. And my bad, it didn't quite get to 200, but still a very nice trade. What helped us with that selection was real simple. We ran our scans, we had good volume, we had PPS buy signals, and the person market catcher was the relative strength was showing signs of outperformance in that market. Here is the person market catcher. Here's the daily buy signal, and it closed greater than its pivot. It just had every different connect the dot stars to a buy. Did it maintain its structural gap higher? No. Did it allow people to profit? Yes. Can you trade options on this? Depends. So again, when we put out recommendations, we're putting out stuff that we see as far as both relative strength and what you see on this radar screen. And that brings us to my next and final statement. If the stock market is going to go down, then look at the inverse, that is, ETFs on the market. If they look bullish, then the stock market, it confirms it may be bearish. Now, this is an interesting concept because here we had a doji, it's bright blue, and if we close this week Friday greater than that high line in the sand, this would be these little dashed lines. It's hard to maybe see. I'll tighten it up a bit. But if we close greater than, we're generating a weekly buy signal in SDS I don't have confirming volume crossing over yet. And again, this is a weekly chart. We have to wait till Friday. But I would tell you this, gang, if we get that market to close greater than the last 3 weeks high on SDS, with the right volume pattern, if we get confirmation on volume like we did over here, look at that setup. The volume looked very impressive. It started to cross over, and then look what we did. We generated a high close doji right over here back last October. Isn't that a coincidence? The first time I get a sell signal in this spider, it didn't happen since October. The last time we had a buy signal in SDS, it's confirming. That's the key I'm talking about. It's not just confirming, by the way, with a little PPS. It's not confirming with a warning of that buy signal. It's confirming also with a really weird pattern. The gold, the blue, that's a high close, the John Person proprietary, published, copywritten, high close doji signal. And a lot of people now follow that. You'll find writers at Forbes copy this. You'll find people all over have figured out the person's methodology of using the high close doji pattern against pivot support. That was one of the functions. And by the way, that's what that book was all about some 15 years ago. So we've just been able to run this into scans. And I want you guys to figure out, boy, we haven't seen a dynamic potential change. And the key on this is going to be right there, volume. So stay tuned. This is a very dynamic market. It's very fluid. It changes. I mean, who thought President Trump would tweet what he did? And yet, here's the market. Look at these big time changes. IBB had a great little 1 day and a 2 day pop, and it has a flop right now. So once again, don't get too bearish in the hole. Number one. Number two, we got to be a little bit more diligent. But I will tell you right now, for the first time all year, things are dramatically changing. And as you see and work with me here and go up and down my radar screen of all the stocks and the sectors I look at, the one common denominator is we're starting to do what? Change. Everything's red, but more importantly, a lot of stuff is generating new, fresh sell signals. L no good O if bullish. That's my message. Thanks for watching, and I'll keep you posted. Watch those levels. Look at that SDS, and hopefully we'll give you some insights before Friday. If you like the video, then give me a thumbs up. If you don't like the video and you give it a thumbs down, maybe send a comment and be nice, constructive criticism. What don't you like about it? My voice, possibly. You can't not say the technical analysis isn't good. That's for sure, because we do have provide solid results. It's about how you enter the trade. It's about where you place your stop, and it's also about trying to get off that train ride, within reason. In other words, if you get out too soon and the market breaks out, you leave money on the table. If you don't get out at all, you don't make money either. And in this environment, we've gone from, and I just want to point out, we've gone from a very dynamic shift with strong fundamentals. People were pricing in a recession this year, and then that dissipated. They were pricing in the Fed and interest rate differentials that have switched between here and, of course, Europe and Asia. More importantly, we got this China deal. We got strong GDP. We had great employment numbers. All of that's not gone to waste, but if the market is overly priced in to perfection, and any bad news, it makes markets vulnerable for profit taking. That's what we as traders need to be watchful for. Those shifts in the market, and we look for signs, those crumbs that are left as signs of clues on which side of the market to be on. With that said, I hope you found this at least not just entertaining, but also educational, and we hope profitable in the days and weeks to come. Thanks, everyone.